focus. Ideate, innovate, enable.
Hello and welcome to Decoding Business Growth. I am Sumera Abdi. The focus of this week's story is a homespun entrepreneur, LD Mittal, whose family was trading in agricultural commodity, and he actually chose to spend a good part of his life working for LIC in Punjab, the place where he grew up. Professionally, he was doing very well. But one fine morning, it dawned on him that he wanted to be his own boss. So he quit his job and betted big on the farm equipment business with money borrowed from his friends and parents. But much to his dismay, it was not smooth sailing from the word go. He got the sector right, but he got the product wrong. And this very nearly wiped him out. But he didn't lose heart, nor did he change his line of business. He continued to focus on the farm equipment business by rejigging the product. The result was soon evident. Today, International Tractors is the third largest tractor manufacturer in the country. Clearly, Mittal's strategy of building a very powerful tractor that's competitively priced and simple to handle by farmers has made Sonalika tractor a strong brand name. Interestingly, Sonalika, which literally means Sone ki lakire or lines of gold, has changed Mittal's fortune. Take a look at the International Tractor story. I'm sure you'll find it very interesting.
How to make 5,000 crore rupees by investing just 5,000 rupees, and that too legitimately? Well, that's not some billboard ad by some stockbroker. It is the true story of LD Mittal, who, in a span of 5 decades, has transformed a small outfit into a flourishing listed company by sheer hard work and entrepreneurial skills. So much so that International Tractors has emerged as the third largest tractor and farm equipment manufacturer in the country. This Punjab-based company, known more popularly by its brand name Sonalika, produces tractors ranging from 20 horsepower to 110 horsepower. These tractors are sold through a network of 900 dealers across the country. Besides tractors, it also manufactures farm machinery attachments, diesel gensets, with a view to providing total agricultural solutions to farmers. And this strategy has enabled the company to carve a 12% market share in India and gain foothold in over 80 countries. The seed of this enterprise was sown way back in the 60s. After doing his MA from Punjab University, LD Mittal joined the Life Insurance Corporation of India as a branch manager. During his working years, he was smitten by an entrepreneurial bug, and he decided to act on it. Having an agrarian background and seeing the government's Green Revolution drive, Mittal felt it was opportune to do something in that space.
See, I entered tractor business due to my family business, which was linked with the farmers. My father was a food grain dealer, and he used to advance money to the farmers for purchase of seed and fertilizers. And at the end of the year, when the crop is ready, he used to recover his money from them and sell their crops. Many times it happened that the crop is harvested lying in the field, and the rain and storm comes and everything is blown off. So in that scene I have seen my father and farmers crying virtually, which moved me to do something to rectify this problem. So I went to my friend in Agriculture University, Ludhiana. Maybe there should be some machine who can process this crop in a number of days instead of months, so that the vagaries of weather do not affect. He said there is no machine so far, but there is one machine lying in that corner which has come from Japan. You can try that if that can work. I brought that machine to Hoshiarpur and hired a shed and made 50 machines of similar nature. But all the machines which were sold came back duly rejected by the farmers. because actually that machine was meant for paddy. Japan produces paddy. So it was not suitable for wheat crop. So we were virtually bankrupt. I went to him again, मैंने कहा मोहन सिंह ये तो काम खराब हो गया. कहता don't worry, I'll come again. So he came and he saw what is the difference between wheat crop and paddy crop. He made some adjustments and it worked. It worked very well. And then starts the real journey towards success of Sonalika.
After that, there was no looking back. With the brand gaining acceptance and business booming, the logical step was to get into tractor manufacturing. Thus, Sonalika launched its tractor operations in 1996 under the name of International Tractors. In the first year, it sold 396 tractors, which rose to 25,614 units in 2005. In 2000, it entered into a joint venture with Renault of France and Claas of Germany to upgrade the technology and systems.
The turning point, I think, was the year 2002, when we went for a joint collaboration with the Renault Agriculture of France. As everybody knows, Renault is the world-renowned automobile company. So they participated with us financially and technically. So their systems, all French systems technology was adopted by this company. And it's very exciting for me to tell you that French tractors, which they were producing in France, were produced in this factory and exported to whole of Europe under this collaboration agreement. That was really a turning point for us.
But soon, the Mittals parted ways with Renault and roped in Yanmar of Japan in 2005. This joint venture strengthened Sonalika's tractor quality further. Thus, for the year ended March 2015, the company sold 66,260 tractors in the domestic markets. Despite being a late entrant, the Mittals have managed to beat other players to emerge among the top three after Mahindra & Mahindra and TAFE. Emboldened by their success in the domestic markets, the Mittals, with a view to insulate their business, which was prone to cyclicality, cast their eyes beyond the country's shores. So they entered into a strategic alliance with Yanmar of Japan to raise the bar of their tractors to global standards.
We made sure that everything we are able to do right in the first phase, because you don't get a second chance in a country like in a the place like Europe. So we selected the right partner for the market, we made the right research of the market, and we put up the right product. And at the first place, we were able to successfully ensure that all the customers are more than happy with our products. And it was priced at a very reasonable price. But I am happy to share with you that it was never sold or projected as a cheaper product. It was, the equivalent to the other international brands, and the difference was not much. So that was our strategy.
Today, International Tractors is a leading player in markets like Algeria, Myanmar, Bangladesh, Nepal, and many other Asian and African nations. The adoption of the latest technologies, coupled with its state-of-the-art plant, experienced teams, and tailor-made solutions, have made Sonalika a dominant player in the farm equipment sector. And this shows in its financials. Sales grew from 7 crore rupees in FY 1997 to 687 crore rupees in FY 2005 to 4,047 crore rupees in FY 2015. This works out to a CAGR of 19.4% for the last decade. During the same period, the net profit rose from 14 lakh rupees in FY 1997 to 88 crore rupees in FY 2005 to 582 crore rupees in FY 2015. Well, on that note, it's time for a short break. When we come back, CNBC TV 18's Sumaira Abdi talks to Hemant Vora of ICICI Securities to decode International Tractor's success story. Stay tuned. Welcome back. International Tractors has been growing at a stronger pace, while its competitors have not been so lucky. Some of them are posing a negative growth. Sumaira Abdi caught up with Hemant Vora of ICICI Securities to get a market expert's view on International Tractors.
International Tractors, they've been in business now for 2 decades. How would you rate these 20 years?
I think this 20 years, the way International Tractor has done for themselves, we clearly see that, they started from scratch. More than around 15 years is when they started off. And to reach at a position of number 3 player in this industry is commendable. And I think, I would say the 2 basic reasons why they've managed to do this is, one is that they have maintained to the core business. So they have not really digressed themselves into the other non-core activities which we see generally happening.
Sure, yeah.
And especially when they are churning out cash year after year. So in spite of that, they have managed to stick to the core business, which is, the tractor. And I think the second important piece out there is, knowing the pulse of the end customer. The promoter, Mr. Mittal started manufacturing the tractor himself. So that really gives a very good sense of how the market is looking like.
Okay, so they may know the pulse of the customer, but
Correct.
they'll never know the pulse of the monsoon, So this is a company that is so dependent on the way the monsoon might shape up. If it's a good year, fantastic. If it's a bad year, it's just too bad. Do you think they've managed to insulate themselves okay?
I think they've managed quite well. And again, as I would say, that predominantly they were north-based when they started off, factory being in Hoshiarpur, so predominantly north-based. But the fact is that the way they diversified themselves into other markets. So, for example, very clearly, if you look at the way they've grown in the northern and the west, in the eastern market, in the western and the eastern market, they've actually, grown almost more than 3 times in the last, 6 to 7 years. That's number one. So clearly a domestic strategy which they had in mind. And number 2 is international. So today almost 12 to 13% of their sales come out of exports, which is highest amongst the peer group companies if you look at as a percentage of total sales. So this clear strategy of focusing on domestic and the export market, new domestic markets and the export market is something which is really, they hedged themselves from the cyclical nature of the business.
Financially, many people would say that this is a company which is a little bit conservative. For example, it's taken Blackstone 18 months to convince them to take their money. So do you think that, this strategy, while it may have worked so far, may not work in the future, considering the kind of plans that they might have for capex, expansion, growth, and so on?
I think I would defer whether they are conservative. The fact that, in spite of being a company which has just started off 15, 20 years back, they actually went into a JV with Renault way back in early 2000, early to mid 2000. Then they actually got into, Yanmar, which is one of the leading, Japanese players as a strategic partner into the company. They had a few private equity rounds as well. Again, Blackstone was, third private equity round which came in. So yes, they do take time, but that's actually good, right? Because in spite, they very clearly evaluate whether we need money, whether we need partnership, what are we looking from a partner? That's very, very important. So I would definitely not say that they are conservative. Yes, they take time, but they take the right decision, which is in the interest of the company.
How do you think this company, should they go in for listing? Is listing something that will benefit this company?
Very much. So this company, as you rightly mentioned, a debt-free company, one of the highest, margins this company has amongst the other, players who are operating in the sector today. A company which has shown a phenomenal growth year on year. So listing would definitely help. My sense is that they may be another 2 to 3 years away, considering the fact that there is still some traction to be developed there.
Okay, so the industry itself, it's a smallish industry, right? There are 20 players, 4 are international, the rest are domestic. Can they better their market share? Can they do much better than the position that they enjoy?
They definitely can. I think every company has a certain, what I would say, stages in their life cycle. So they already have gone through, the startup cycle, the growth cycle. Now they are actually looking at consolidating the Indian market. The next orbit for them will be really how to become a global player. Right, so with an exports of almost 12 to 13% of their total top line, now it's basically getting into the next orbit. And for that, they really, what ITL will have to do is try and see that how various verticals of the business, be it management bandwidth, be it processes, be it technology, be it branding. That's something which they will have to really focus on to see that how they move into the next orbit.
Yeah, sometimes it's not just enough to make a good product, is it?
Yeah.
But, while they may have done very well, they've created a niche for themselves, they're still not the market leader. What is it that will propel them now into that next phase where it's the company, the number one brand?
I think very clearly, as I mentioned, they really need to move into the next stage, which is of the global stage. And, the exports, they have done very, very well in that segment. Right, the domestic markets, which they have again, the other markets which they have captured, largely the Western market and the Eastern market. So they are growing into that direction. Technology side is something which they have already taken in place. Engines is something which they are manufacturing today themselves. But the important piece is that this industry is now moving from a tractor industry to a farm mechanization industry. Okay, so there's a lot of mechanization, a lot of improvisation which is happening in this industry. And that is something which they need to capitalize going forward on whatever good points they have earned so far.
All right, so I guess the listed space is going to wait by for an eager entrant. Thanks very much, Mr.
Thank you
Vora,
so much
for joining in.
Thank you.
Well, that was Hemant Vora playing straight bat. On that note, it's time for another short break. When we come back, we look at the road ahead for international tractors. Stay tuned. Welcome back. Globally, International Tractors is one of the few debt-free companies operating in the farm equipment space. It is this strong balance sheet that gave the Mittals the confidence to refuse stake to the reputed private equity player Blackstone when it came calling. But after 18 months of intense persuasion by Blackstone, the Mittals relented. Sumaira Abdi caught up with Neeraj Mohan of Blackstone to understand why they doggedly pursued this company.
Neeraj Mohan, second nominee director of Blackstone, now joins in. Mr. Mohan, thanks very much.
Thank you so much.
International Tractors is a company that was actually fighting off your fund for the longest time. So how is it that you finally managed to convince them?
So essentially, the decision that the shareholders and promoters had to take whether they wanted to bring in a large international private equity fund into the mix or not. And I think it was a tough decision for them because the company did not need any more money. Company was adequately funded and capitalized, so the decision was more personal one on the part of the promoters, because whether they wanted to bring in Blackstone or not when the company did not require money. Eventually they got convinced of the value that Blackstone would bring to the organization, so that's how we were able to finally convince them.
Okay, so let me put this another way. Why was it that you kept persisting in wanting to give your money to this company, or rather, what is it about this company that appealed to you so much?
If you look at this company has two very unique, distinctive features. It's a 20-year-old company, and if you look at one of the aspects about the company which really impressed us was the fact that this company continues to have its original entrepreneurial culture. So the level of engagement that the founders have in the business, the way they drive strategy and execution, and the level of energy that the whole organization displays is really remarkable. It's unusual for a 20-year-old company to have that level of excitement and energy and push behind initiatives. So that is one thing where you see this company being completely different from an average 20-year-old organization. So it's a high involvement model. Promoters continue to be fully involved, drive strategy directly. That's one part. Second is its financial performance. In past 20 years or so, I mean, whatever financials that we have seen that this company has gone through rapid growth phases. They have gained market share rapidly in certain periods. Even during those periods, the financial performance continued to be as good, as sound as ever. So when you're gaining market share, doesn't mean that you loosen your expectations on profitability or you give up sound financial management. And that is something which is very admirable about the company. It's a very disciplined organization, and it reflects in the overall financial performance. So it's a highly profitable company. Return on investment has been exceptionally good. And that is something which sets this apart.
And on a comparative basis, where does International Tractors stand against their peers?
there are two or three things which we think that set this company up very well in terms of its ability to compete. One is that the product of the company is a very robust one. It's a high performing product. It's a robust, low maintenance product, and it is very reliable, and therefore the product is one of the strengths that the company has. And this is one of the strengths which is difficult to build for any organization. So this company has gotten the product right, which is something which is remarkable to begin with. Apart from that, it's a very focused organization, executes very well. Therefore, we do think it will compete very well in the organization, not just in this market, not just domestically but internationally as well.
Mr. Mohan, thanks very much for joining in.
It's clear that International Tractors is on a strong growth trajectory. Some 3 years back, the company entered the European and American markets, where it has managed to gain over 1% market share. Clearly, the growth opportunities in these markets are huge. Sensing this global growth, the management is confident of hiking the company's export share to 50% from the current 15 to 18%.
Our dream has been to be second to none. And to start with, we will ensure that we are at least one of the top 3 companies in each country, wherever we are. And we are moving towards that, and very successfully. And the privilege of having a very good material, very good tractors, quality-wise and otherwise, for sure will be successful in our mission.
Well, the Mittals are gearing up for the next growth phase. The capacity is being ramped up to 200,000 units by 2016 from the current level of 150,000 units. The management's vision is to carve a 20% market share in the domestic market and be among the top 3 brands globally. Going by the Mittal's focus approach, one could easily say everything is possible.
Well, looking at LD Mittal's story, I'm reminded of an old ad campaign that ran successfully for 50 years and is a case study at all mass communication colleges the world over. It's about Avis Rent-A-Car Company. The ad campaign was, "We're number 2 and we're trying harder." Here Mittal says he's number 3 in India and he's trying harder to become number 3 globally. Well, going by the company's past track record, Mittal looks set to achieve his dream. On that note, it's time to say goodbye. We'll see you next week with another interesting episode. Till then, keep watching CNBC TV 18.